You're listening to the Infinite Banking Mastery Podcast. Did you know that you could build a tax-free pool of wealth that's liquid and accessible all your life while building your retirement nest egg? Gain full control of your financial future and stop relying on the government and banks. The wealthy have already discovered this wealth-building secret. Now it's your turn to get financially secure without following the conventional wisdom that keeps you in debt to banks. Now here's your host, Valerie LaRocque.
Hello, everybody. Welcome back to the Infinite Banking Mastery Podcast. I hope you had a wonderful holiday last week with your family for Thanksgiving. I hope that you didn't have any family fights over the dinner table. Hopefully, no family fights over the dinner table, but just love and gratitude instead. That's what I hope for you, that you had a wonderful time. And after just hanging with all that family, I think this may be a great topic for the week. Beneficiary designation. So have you looked recently or asked or paid attention to who your beneficiaries are on your accounts, your life insurance accounts, your life insurance policy, your 401k, your IRA, your investment accounts? I know oftentimes people sign up for something, they apply, they complete the application process, they list a beneficiary, or sometimes they don't list a beneficiary because they plan to do it later. But usually they list a beneficiary and then forget all about it. So I wanted to bring up the topic and ask, is that you, or do you know who your beneficiaries are? I wanted to note as well that these types of accounts, life insurance, 401k, IRA, investment accounts, when you list the beneficiary, that allows for the company to pay that beneficiary directly. So once you pass away, that money is not going to go through probate or through any directions you might have listed in a will or even in a trust or anything like that. They will be distributed directly to your beneficiary. Now, you can have a trust, and you can put the trust as a beneficiary if you do want specific instructions for children that are underage or other specific instructions. You can have a trust and put that trust as beneficiary. But otherwise, if you have a person's name listed, those funds will go directly to that person. So it's important to stay on top of this and make sure that whoever you have listed is the person that you want the funds to go to. Another thought that I wanted to share is that you can put something called payable on death, P.O.D., on your bank account, even on your home. Now, this may not be the right option. It's certainly not the right option for everyone, but it may be an option for you. I spoke with an attorney about this, and it sounds like it's an option that works better with smaller estates. You would want to look into your state's tax or your state's estate and inheritance tax if your state has one, because sometimes the state's exemption is low and it could cause estate taxes to be due, even if you are far under the federal estate tax exemption, which is very high right now. And the reason the estate size matters is because with a large estate and lots of assets comes more complexity, and you likely wouldn't want assets falling outside of the estate plan and going directly to beneficiaries, aside from life insurance beneficiaries and investment account beneficiaries. So adding a payable on death to your bank account or possibly your home might be a good option if you don't have a sizable estate or maybe haven't gotten around to getting your will done. This would allow your beneficiary to be able to access your bank account right away without having to wait for it to go through probate. Maybe if you don't have a life insurance policy, for example, and these funds would help to cover funeral expenses, that might be a reason why they would want access to those funds right away. So if you don't have a will, a trust, or haven't done any estate planning, this may be an option you want to consider. Keep in mind that you may want to consult an attorney, as well, as I am not an attorney and I am not trying to give you legal advice. I'm just letting you know of the option. And when you're looking into your estate planning, you might want to look into the probate process in your state as well. As in some states, for example, California, going through probate is a bit of a nightmare. But in other states, like Washington, it is not so bad. So you might want to look into that when you're doing your planning to decide, if you're trying to decide if you need a trust or if you don't think you need a trust, that might help you make the decision. How is the probate process in your state? A trust can make things very easy for your heirs to pass things on, but it may not be necessary. Although, if you do have a trust, you might want to make sure your ex's name, your ex spouse's name, isn't still listed as a trustee, if that's not what you want. Making sure you have the correct beneficiary listed is why I wanted to do a podcast on this topic, because you want to make sure you have the right person listed and make sure that that's who you want your assets to go to or your death benefit to go to when you pass. And the reason I thought of this is because I just dealt with recently a loved one who passed away. And when she purchased her life insurance policy a long time ago, maybe more than 10 years ago, she had listed her parents as beneficiaries. And even at that time, I was trying to give suggestions for a younger beneficiary, someone else, because they were much older than her already. But she wasn't interested in changing it to someone else. And we spoke about it when her father passed away. We spoke about it when her mother passed away. And she, I feel, was just deciding or coming upon a decision of who she would want to change it to or who she would want to leave the funds to. But then she got sick and then she passed away. So let me just state this reminder to you. You don't know what is going to happen tomorrow. None of us know what's going to happen tomorrow. And since you don't know, you might want to make sure that you review your beneficiaries to make sure the correct people are listed. With a lot of companies, you can go online and you can update it yourself. You can change it whenever you want. This certainly becomes more critical when you're dealing with blended families, children from a prior marriage, a new spouse, stepchildren. You want to make sure that you have the funds going to the people you want them to go to. I have also dealt recently with a client who is going through a divorce. Both her and her husband are actually listed as owners on all of their policies, each of their own policies and their children's. Now, I would say it's not very common for both spouses to be listed on all the policies or on each other's policies. But if you are, if you're co-owners on these policies, you will have to make all decisions or sign documents together to make any changes. If you're going to want to take a loan and documents are required to be signed, or even if you want to call it in, you'll both need to be on the line. If you want to make beneficiary changes, both people will have to do it together. Now, here's another thing you're going to want to pay attention to in your state, as more than half of US states are now automatically revoking beneficiary designations if an ex-spouse is listed, unless you were to reaffirm that that is the correct person that you want as beneficiary after the divorce. Too many people would get remarried and then would not want to or would forget and wouldn't update their beneficiary. And so the funds were going to that ex spouse, causing lots of lawsuits and family feuds to happen. And because of that, there are many states now who will revoke that beneficiary if the ex spouse is listed. Now, in some cases, you may want the ex spouse listed if it has to do with children, or that they want to leave funds to the children if something were to happen to you, or to your ex spouse. And if that's the case, you're simply going to want to reaffirm it, resubmit a beneficiary form after you are remarried to make sure that the ex spouse is listed as a beneficiary or as a portion of the death benefit, whatever you meant to happen. Now, another thing that you want to keep in mind is that just because the insurance company might revoke the ex-spouse if that person is still listed as your beneficiary, does not mean that that death benefit would go to your new spouse automatically. If no contingent beneficiary is listed, the funds may default to the insured's estate, which could open the door for legal complications and probate. As I mentioned before, life insurance funds do not go through probate. They go directly to the beneficiary, so you wouldn't want them to be caught up in probate. Not at all. Now, of course, there are some states that just pay whoever is listed as beneficiary as well, whether it's an ex-spouse or an ex-relationship. I actually have a client whose name was listed on an ex-partner's policy. They had never been married, but his name was listed on her policy, and she passed away, and so he received the death benefit. Now, this person had apparently just gotten married, maybe a year or two, but that new spouse's name was not listed as the beneficiary, and this state did not go by these new rules that are rolling out or new states that are rolling out revoking ex-spouses. And again, they weren't even married. But so it went ahead and paid because that beneficiary's name was listed. So it paid the person listed. So these things that have happened, I just wanted to share this with you to help you keep it top of mind that if something's going on, especially you have something, life changes happening, relationships are changing, you just want to make sure you remember to check your beneficiaries and update them if necessary. Now, if you don't have a life insurance policy to even name any beneficiaries on, and you would like one and you would like to work with me, feel free to reach out to me. You can reach me at Valerie@alphaomegawealth.com. I would be happy to meet with you, connect with you, learn what your financial goals and concerns are, and help you get started. As always, thank you for listening. I hope you have a great week. Take care.